Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of September 5th through September 9th. And we'll talk about how do we make money trading in the worst month for investing, which is September. We'll talk about why September is called the worst month for investing. And then if you stick around to the end of the video, the end of our weekly trading game plan part one, we'll talk about strategies for how we can make money trading in this September, in the worst month for investing, or in any type of stock market. So again, stick around to the end of the video. We'll do our market analysis. We'll look at how the markets performed, all the data we got, the news, etc., how it affects the markets, and how it affects our trading strategy going forward for the week of September 5th through September 9th. And then again, we'll talk about how our strategies for making money trading in this September, the worst month, what they call the worst month for investing. So stick around and we'll get started. Okay, here's our notes for this week's weekly trading game plan part one. It's a Google document. Again, you can find these notes, these Google document notes for our weekly trading game plans in the trading game plans public folder on the Google Drive. You can find a link to this public Google Drive folder with our weekly trading game plan notes in the description box below. Originally, I was considering putting an explanation of why people say September is the worst month for trading, and which includes explanation of what they call the September effect or the September swoon as part of this video, but in consideration of your time, and given that some of our BeachBum traders are familiar with these terms, the September effect, why people say September is the worst month for investing, and the term September swoon, and the fact that we talked about this last year at this time. I put this in a separate video. I have the link to this video in the notes here. I'll also put it in the description box below probably. It's currently unlisted and under construction, so please be aware we will be publishing it as a standalone video as soon as we're able, but again, in consideration of your time, I put that as a separate video. So if you're not familiar with why people say September is the worst month for investing, or the term September effect or September swoon, or how those affect your trading or investing and strategies, we'll talk about the strategies, how to make money trading in September in the worst month for investing, given the September effect, September swoon, at the end of this video. So please stick around. If you're not familiar with these terms and why September is the worst month for investing, I'd highly recommend that you go view this video. Okay, let's start our market analysis, etc., strategizing in FinViz. We'll go to the FinViz homepage. You can find this link in the notes and in the description box below. We can see, Monday or Friday was pretty volatile. The market started up, then they declined, ended up mostly down. NASDAQ taking the biggest hit, over 1.3% down. We can see more decliners than advancers, many new lows. Now the majority of stocks are now again below their 50-day moving average, and they are still well below their 200-day moving average. And now the overall sentiment tendency is negative, bearish. So we've been saying for a long time we're in a bear market since the beginning of the year. We had that brief bull rally in a bear market, and now we're back in bearish territory again in a downtrending bearish market. So we've been talking about strategies for how to trade, how to make money in bear markets since the beginning of the year. So please refer back to those previous videos as well as to how we can make money in a bear market or in any kind of market. So we'll focus on that today. So again, we can see the heat map, almost everything was red except for energy. Energy had some positive trends that we'll look at. We see some of the news, stock reverse gains, finished down, ends week on a down note as jobs report gains fade. and then down. So if we quickly look at the futures, oil was up, it took a dip, it spiked up at the end of the day. Natural gas went up around noon and then went flat. Gold and silver had a early rally and then declined late in the day. It looks like they're bouncing back up. And then we see all the indices were down. Interesting, the euro's now again below parity with the dollar. So uh, a euro is worth now less than $1 again. Yen's declining as well. And then we see this very smile-oriented inverted yield curves, and we see the yields actually did go down some, and we'll look at that in the futures as well in a minute. Okay, if we look at each of the major indices in FinViz, here's the SPY S&P 500. So we can see it previously tested the upper trend line of its downward channel, failed, dipped down. Then you can see it failed at its 20-day moving average, trended back down. We can see now it's broken down below its 50-day moving average. We can see it made a late day test of that 50-day moving average, failed, and so all the indications are for a downward trend, a continuing downward trend. So if we zoom out to the weekly, again, we see the test of the 200-day moving average, which we talked about last week, and then we see the sharp decline. We see it's now below the 50-day. It tested, failed. So all indications are for downward momentum, downward trend, bear market, etc., which again is not surprising. It failed on this test of the 50-day, and that's what we were kind of watching for. If that was going to succeed, that failed. So now, again, it has a severe downward momentum, a downward trend. So again, we're still in a bearish market, and we should trade accordingly. If we look at the Qs for the NASDAQ, again, very similar. It didn't actually even make a test of the 200-day moving average, and downtrended with the other markets. Tested, briefly the 50-day moving average, failed, and is downtrending as well. So if we look at the Dow, we're gonna, we see here, like the S&P, it briefly tested the 200-day moving average, failed, went down to the 50, briefly tested that, failed, and now it's dropping below the 50-day moving average. It tested, briefly failed, and so again has significant downward momentum. Russell, and they all very similar. They all went and tested their 200-day moving average, failed, broke down, and now they've broken down below their 50. So again, all the major indices have a significant downward pressure, downward momentum. We look at the VIX. Surprisingly, the VIX, it briefly popped up a little bit. It's now sitting in the 25 range, but really didn't, we didn't have one of these severe volatility reactions. That part of that may be because of what they call the summer stock market doldrums. So we're just coming off the summer, and so we got a reaction. This is all again reaction to the Fed Jackson Hole fallout that we talked about last week. All this week was just mostly continuing on that theme, that fallout from Jackson Hole, from the Powell speech, and so we see a little elevated volatility, but again, nothing significant, and we can see it slowly retracing, trending down. So we'll talk about future events that may cause increased volatility and how we can prepare for those in a minute. So now let's look at the groups, the sectors, the industries, etc. in FinViz. And again, we have previous videos that explain in more detail how to use this groups tab in FinViz, how to find various stocks using the groups tab. So we would refer you to those previous videos. If you're not familiar with how to benefit and use the FinViz Groups tab. So if we go to the Groups tab in FinViz, we look at the sectors. We see on Friday, the only positive ones were energy, basic materials. Again, the sector rotation that we've been talking about for some period of time continues, both intraday and intraday. So we see they were the best performing on Friday. The worst performing was communication services, technology, etc. For the week, we see, basic materials actually was quite negative. Technology, again, very negative. We saw utilities had a little bit of a run. It was the the best house in a worst neighborhood, as they say, for the week. But we see for the month, energy, utilities, and then basic materials and defensive. We've seen this trend for quite some period of time, and again for the quarter. So again, energy, basic materials, they tend to be rotating in and out of those, consumer defensives, etc. They keep trying to run technology, which in the current market environments, those rallies have not been sustainable or not sustainable. So if we look at the industry breakdown very quickly for the day, again, we're going to see a lot of energy, a lot of basic materials. Silver, gold had a nice recovery rally bounce on Friday. Again, we see a lot of oil, coal, etc., which had been beaten down during the week. We see the worst performing, some luxury goods, some gaming, etc., technology. For the week, we saw uranium really had a major run for the week. There wasn't much else that was very positive for the week. The worst for the week, some basic materials, copper, aluminum, etc. Coal. But for the month, again, it's energy, uranium, coal, etc. Some basic materials. And the worst performers, silver had been beaten down severely and had a significant bounce on Friday. Looks like a recovery, turned back up. Again, gaming, semiconductors. We've been talking about the downturn in semiconductors due to the glut, poor guidance, etc. So again, when we get to our strategies, we'll look at, and the futures, we'll look at possible opportunities for playing these various industries. Okay, now let's discuss some of the economic data we got from last week and how it impacted the markets, and then we'll also talk about upcoming economic data for next week. So if we go through last week, just some highlights. On Tuesday, we got some housing. We can see how housing continues to roll over. Prices are declining. We got this consumer confidence, which was positive. So we're seeing data that says the consumer confidence is improving. We got the open job openings for July, which was better than expected. So that says there's still a lot of open jobs. And we're going to see in much of this data, it says the job market's still strong. And again, that fuels the concerns in the market that the Fed can continue to be aggressive, continue to be hawkish, continue to raise rates aggressively, and therefore that contributed obviously to the downtrend throughout the week. So we see mortgages applications are way down. Again, all indications are the housing market continues to decline. It's in a recession. It's continuing to decline. Again, we saw non-farm employment was actually, negative, a lot worse than expected. The PMI was pretty much in line, and then we saw crude oil inventories, a major drawdown on Wednesday, and that contributes to high oil prices, but oil still declined in general. So it's been testing the $90 mark and failing, tending down from the $90 mark. So this didn't really cause a major spike, which was a little surprising. Gasoline inventories also were down. So again, crude oil inventories were down much more than expected, but again, it didn't really cause a spike in oil prices. Another thing that was commented on Wednesday, this is one of the Federal Reserve officials, Mester, sees Fed rates going to 4% by the end of the year. So again, we've talked about that. Expect rising interest rates, about 4% by the end of the year. Exactly how they get to that, is it a couple 75s, a couple 50s, etc. It's not really that significant given to the fact that the interest rates are rising and they're going to be 4% or so by the end of the year. So we should plan accordingly in terms of our trading and investing. So Thursday, we saw job cuts was a little less than expected. Jobless claims was pretty much in line, a little higher than previous. Initial claims was less than expected, though, so continuing was pretty much in line, but initial jobless claims, again, was less than expected. And again, all this contributes to the resiliency of the job market. So you can see U.S. jobless claims tumble to a 9-week low. Layoffs remain historically low. Although we're hearing continuing layoffs in the tech sector. So the tech sector is laying off, but the overall job market is remaining pretty resilient. So that says that, people are still getting jobs in other industries. And some of these technology layoffs, these people may be getting other jobs very quickly in other companies that haven't laid off yet. So we also saw this manufacturing PMI was a little better than expected. Construction, the ISM was a little better than expected. And then we saw natural gas storage was up. So again, more natural gas in storage. Again, some of the news coming out late Friday, early this weekend is that Nord Stream 1 pipeline, Russia has no date for reopening it. So be aware of that. That may cause spikes in the natural gas price. So we'll talk about strategies for trading natural gas as we have for some period of time. So then Friday, we got the jobs data. We see average hourly earnings was down a little bit, but still high. So that's, inflationary. Payrolls were better than expected. Non-farm payrolls were better than expected. And the unemployment rate went up a little bit. So, but again, all this pretty much says they called it Goldilocks, and the markets initially rallied a little bit on that data. But again, all this resiliency in the job market says the Fed can be aggressive, hawkish in fighting the inflation, and there's evidence that the salary rates will continue to contribute to inflation. So next we'll take a look at the economic data for next week. Just another quick reminder that the markets are all closed on Monday, September 5th for the Labor Day holiday. So hopefully you all will have a great Labor Day holiday weekend. And on Monday, just be aware markets are closed on Monday in the U.S. for the Labor Day holiday. So if we look at the economic calendar for next week for economic data in investing.com, and you can find the link in the notes, etc. We see Monday again is the Labor Day holiday, so markets are closed. Tuesday or on Monday, there is an OPEC meeting, so it will be important to hear what comes out of there. There's some discussion that OPEC Plus may cut production, and again, that may cause a spike in oil prices. So we want to hear what comes out of that meeting, and then on Tuesday or in the futures prior to Tuesday, we can see what effect that may have, if any. We get some PMI data on Tuesday, ISM data on Tuesday. Again, those are all potential inflationary factors, economic resiliency. How bad's the recession right now? Again, these are for August, so they're backward looking. Get mortgages again. Have some more Fed officials talking. Continuing jobless claims. So again, resiliency of the job market. We get, as typical, we get natural gas on Thursday. Also get some oil inventory on Thursday. So energy, watch energy on Thursday. Friday, we've got some wholesale inventory data. So again, that'll tell us about supply chain issues, etc. And then we get the rig count, etc. So a pretty typical week. Again, there's the Fed officials are now out. They seem to be reinforcing the Jackson Hole message, which they're going to be hawkish. They need to kill inflation, so that's their priority. And if that causes some damage to the job market, to the economy, their number one priority, again, is killing inflation. So we need to plan and act accordingly in our trading so we can continue to be successful in our trading career. Okay, let's talk about the major economic data that we received last week, and then we'll talk about what's in the upcoming week. And just as a quick reminder, please see the Surf the Market Reports channel in our Discord. You'll find a link to our Discord in the description box below, where we try to post near real-time economic data as it comes out. So you'll see as the economic data is released. Typically I go to investing.com and I will copy out the results of that economic data as quickly as I can and post it in this Surf the Markets channel in our Discord, so you can quickly be alerted that it's what the results are and take a look, and then we'll talk about the implications, and we could discuss that in that channel as well. So again, I'd highly recommend you check out the Surf the Markets Report channel, join our Discord, and you'll get near real-time economic data that way. Okay, some further upcoming events to be aware of. Just a reminder, the next FOMC meetings are September 20 and 21st. So as that gets closer, we will be talking about how to position ourselves for trading opportunities given the various potential outcomes for the next FOMC meeting. Then you can see there's meetings in November and December, so we'll talk about those as they get closer as well. We quickly look at the earnings calendar for next week in investing.com. We see earnings is lightening up. We're getting towards the end of this particular earnings season. On Monday, we see DocuSign, some pharmaceuticals, some biotechs. Tuesday, see again a little lesser known technologies, not a whole lot significant. Wednesday, we got UiPath, that's a new tech. GameStop, that's obviously a meme. So watch for meme activity on Wednesday with GameStop. And be aware of if there's anything that would potentially impact any company stocks that you're looking to buy in the same sector. Listen to these earnings. They do matter. We've got Smith & Wesson on Thursday. Billy, Zscaler, some technology, some pharmaceuticals, some biotechs, and on Friday we've got Kroger, grocery. So again, be aware of who's reporting. Again, it's lightening up, so take a look at the earnings calendar and see if there's any potential impact for any of your stocks or any that you're looking to buy. If we continue our market analysis in the Markets tab of the online browser version of Webull, we could see in the histogram, majority declined on Friday, but the declines were relatively small, so kind of a long tail of decliners, just a large spike of very small decliners. We look at the inflows, we can see the NASDAQ, had much more outflow than the NYSE. A little blip at the end of the day, but NASDAQ outflows were much more significant than the NYSE. Just a reminder, you can get a short-term earnings calendar, a near-term earnings calendar by hitting the calendar tab earnings in Webull, so that can help you see earnings that are coming up very soon. If we look at the best performing industries, I'm going to look at it for the week. As we know, Friday was pretty much down. We see uranium, major bump in uranium. It had been beat down, so it turned around. Some of the ones we watched in the past, were all up. If any of you caught that turn and profited from those uranium stocks that we've been watching, congratulations to our fellow BeachBum traders who profited from those watch list items. And now, we can see they're all kind of run up. Everything else pretty red. Telecommunications was major red. Don't see a whole lot of green. So if we look at the ETFs, so we look at the market tendencies, down on the Dow, down on the S&P, bear, mid-cap down. Increased volatility, so up on the volatility, and down on the Russell, which again not unexpected, and short on the FTSE. Look at industries, again mostly red except for energy, basic materials. Pretty much everything else was pretty red. Commodities, grains, gold, gas. Crane shares, I believe, is China. Grain, gold, cocoa. And then bonds and other. The 7 to 10-year bonds up, 15-year tips up, short-term bonds up. And then the futures will also see the currency. So just a quick reminder that as of the recording of this video on August 16th, Webull is currently offering up to 12 free stocks if you open and fund a new account in Webull. This is the most number of free stocks I've seen Webull offer. I don't know how long this offer will last, but if you're not already using Webull, here's an opportunity to get 12 free stocks. You can find our affiliate link to Webull in the description box below, on the About page on our YouTube channel, in the link section. If we look at the futures in FinViz, and again, we have previous videos on how to use this futures tab in FinViz, so please refer to those previous videos. There's links in the notes on how to use the futures tab in FinViz to benefit your trading. So again, if we take a quick look at the futures, we'll take a quick look at crypto. Crypto is pretty much down. Look at the futures. So we see this downtrend in the Dow, downtrend in the S&P, downtrend in the NASDAQ. Again, we've been in a bear market. We saw this bull rally, but now we're continuing on the downside. Russell again down. See the European stock market's also down. German DAX down. See the VIX, it briefly went up, but now is reverting, retracing, kind of flat at about 25. So it may sit there for a while, but the tendency will be to revert unless we get some event to cause it to spike up further. We also see this recent downtrend in oil, but end spike up. My expectation is, retest of potentially 85, and then it's been testing between 90, 85, 90. So we'll talk about opportunities potentially playing that. Obviously, energy had a run on Friday, so we see all the oils were down. We see natural gas had run up to mid-9s. It's been kind of flat. It hasn't really retested those highs recently, but again, with that Nord Stream 1 being shut down, we might get a spike. It's been bouncing around between 8 and the low 9s recently. Again, tomorrow we can talk about potential ways just to play the volatility in natural gas, as it is volatile, has some pretty significant intraday swings that you can make money on. So there are opportunities in all of these, particularly in energy, because it has been volatile. So we see this downtrend and then a bounce in gold and also in silver. So we see a kind of a nice capitulation candle on both cases. Then we see a nice tweezer type bottom and bounce up. So it appears, given the data we see right now, that we may have a turnaround in gold and silver. Good opportunities in those areas. If you haven't taken advantage of those opportunities, you might want to consider potentially watch for that swing back up in gold and silver. Again, opportunities to make some money. So, and again, tomorrow we can talk in more detail about how you can potentially take advantage of those opportunities. Similarly, a lot of the other commodities have been volatile but declining and potentially bouncing back up. We see copper, again, decline. Looks like it may have made a bottom, maybe turning back up. And again, we'll talk tomorrow about various ETFs, various ways you can play these commodities, and we'll look at their risk-reward profile right now. Treasuries, again, the prices were declining, the yields were going up, may have achieved a bottom. Recently, we see a nice, tweezer type bottom on the 30-year. So again, tomorrow we'll talk about various ETFs, ways that we can play a potential reversal in the treasuries. So the 30 and 10s look very similar. It looks like the 5s and the 2s have already made a bounce back up. So we see the dollar's still been very strong, and therefore the euro is down below parity again, and the yen has declined further. So again, strong dollar. We've talked about the dollar's strength, that's its impact on dollar-denominated commodities, and also the foreign exchange on companies. So all those previous strategies that we've talked about with the strong dollar still apply. So again, continue to apply that we're in a condition with a strong dollar until that changes. You should be using those strategies in your trading and investing going forward. So we hope that all helps. Okay, so how do we make money trading in September? Historically, the worst month of investing. Well, as we always say, there are many ways to make money trading in any kind of market, in any month, in any market conditions, up, down, sideways, range bound, etc. So there's, again, plenty of ways to make money trading this September or any September, even though it's historically the worst month for investing. And again, just because that is a historical average doesn't mean that this September will necessarily be a bad month. It won't necessarily be down this September. And so we want to adapt to whatever market conditions that we see and apply our tools and techniques and strategies that we know to be able to make money in the type of market that we see. But since we know that historically September is a down month, historically on average, and it's, quote, the worst month for investing, and so all your other financially educated, savvy investors and traders know this, they will probably have a downside bearish bias. So we've got a number of strategies. I won't bore you with going over the same strategies we've talked about before, about how to trade down markets, how to trade bear markets, how to trade declining markets. There's plenty of ways to make money trading in a down market, in a bearish market, etc., that we have outlined in previous game plans. So I'll put the links to our previous game plans where we've been talking about how to trade bear markets, how to trade down markets, going back to the beginning of this year. So as we foresaw this, we expected a bear market starting early this year. We have seen that manifest itself. So we have talked about and shared with you many strategies of how to make money trading in a bear market over the past number of months. So I'd highly recommend that you view those previous videos, and they give you strategies, techniques, etc., about how to make money trading in a bear market. So now let's talk about some more current strategies that may be applicable in our current week coming up, our current trading week, this September 2022. So the first one, so just to quickly summarize some of the previous strategies that we've talked about on how to make money in a bear market, how to trade a declining market, etc. And again, there's more details in each of these videos. But the first strategy would be shorting. One way, particularly in a retirement account like a Roth IRA, IRA, or 401k, is by using inverse ETFs. And again, that's a strategy we employ quite often to short markets, commodities, etc., various themes. And we'll talk about in part 2 of our weekly trading game plans specific inverse ETFs and specific ETFs that show favorable risk-reward profiles that we may want to use to make money trading in September or any kind of bear or declining market. So again, we have more details in these videos about inverse ETFs and how they can be used to short declining bear markets. Another option, if you're going to wait out the market decline and you want to hold your positions and you still want to make money trading during September, during the worst month for investing, you can sell covered calls. So you can be making money on positions even though they're underwater at the time, while you're waiting for them to recover through the worst month of investing being September. Again, if you're a buy and hold long-term investor and you still want to make money trading, you can sell covered calls against your position and collect premium for selling those calls while you wait for those positions to recover. Another thing we always say is in a bear market, sell the rips. Typically in even bear markets, we're going to get these bull rallies. They can be pretty violent. They can last some period of time, and we want to adapt to that and be able to make money trading in those cases, and not get caught holding, something in a declining market. So the theory, the thesis in a bear market is sell the rips. So again, when you get those violent rallies, take advantage, make some money trading, and we can make plenty of money even though the overall month of September may be the worst month. So another strategy we can use to make money trading in September, even if it's the worst month for investing, or any time that we see opportunities, is through sector rotation. And we've been talking about recent opportunities that we're seeing in money rotating between sectors across a couple days, or even nowadays within a given day. We'll see money flow into a particular sector and then potentially out of that sector into other sectors. And again, fund managers, etc., need to show some alpha. They need to show performance, and really, in a declining market, a range-bound type market, one of the best ways to do that is by rotating the money into sectors that are going up, and taking it out of sectors, taking profit in sectors that are up, rotating into the worst performing sectors that are then turning up. It's just swing trading on a sector or industry basis. So again, we're seeing quite a bit of that. Initially, it was within the indices, the main sectors, and then now we're actually seeing some divergence within the industries within a given sector. In particular, within the energy sector, we're seeing some divergence where one day oil might be up and natural gas might be down, or oil and uranium are down and natural gas is up, etc. So now we not only want to see sector rotation, take advantage, make money trading sector rotations, but also within a sector industry rotation. So I guess I'll put sector or industry rotation as the title now. Similarly, intra-sector rotations, yeah, we talked about that. Industry rotations related to these divergences. We also see within technology, we're seeing some divergence of biotech and semiconductors from the general NASDAQ, QQQ, and also the technology sector within the S&P. Some days semiconductors are down, biotech is up, the Qs are up or down, etc. So again, we can take advantage of rotations as that rotates across a given day. If they push semiconductors way down one day, we might expect a bounce, take advantage of that. And we've talked about, opportunities using ETFs. There's SOX L to long semiconductors, SOX S to short semiconductors. Similarly with biotech, there's leveraged ETFs, Lab U to long, Lab D to short. And again, we'll talk about the particular opportunities, and we'll look at the risk-reward profiles of those for this upcoming trading week in part 2 of our weekly trading game plan tomorrow. news themes that we need to be aware of so we can position our portfolios and trade accordingly. The first being that on Thursday, September 1st, you probably heard NVIDIA stock tumbles as U.S. bans AI chip sales to China clients. AMD also hit by new export rules, and I believe this was focused at this time on chips to data centers. So it hit semiconductors, particularly NVIDIA, dragged the tech sector down, technology in general. So be aware of this. And my warning is to watch out for similar actions on all other U.S. semiconductor companies and potentially other technology exports to China and Russia. So this affected both China and Russia. And I was a little bit surprised that these weren't already export restricted. I'm going to leave a link in our notes to ITAR, the International Traffic in Arms Regulations. I've worked for defense contractors, and there are very strict regulations about exporting technology, anything that even could be potentially used in a military application. And it's not just restricted to hardware, it's also data, designs, expertise. It is very restrictive. And again, I've worked for defense contractors. We used to have to take training every year on the ITAR regulations, and compliance is required. So again, I was a little surprised that these chips weren't already controlled under ITAR, and my warning is to watch for similar export bans to be placed on other types of technology, chips, etc., and all kinds of technology that is being potentially exported. If it has any kind of potential military use, even if it's very indirect. Again, you can read this. This is a Wikipedia article, and you can dig into the ITAR regulations if anything in your portfolio may be at risk of impact. This, I guess, this export ban on NVIDIA had something like a $400 million negative impact on their earnings for this quarter. So this is a major impact. So if you have something in your portfolio that may be affected by further application of export restrictions to China, Russia, etc., be aware of that. You may want to take action according to that. And also, if you're going to be buying anything, be aware. Are they at risk of being restricted from exporting to China, Russia, etc.? And how would that impact their potential sales and profits? So something definitely be aware of, and watch out for similar additional actions in these regards. So I hope that helps. Okay, another significant news from Thursday, September 1st, was further lockdowns in some of the major Chinese cities due to the pandemic, and there's zero tolerance for any pandemic cases. And so they're locking down some additional large Chinese cities. They're very technology oriented, so it's something to be aware of. How will that impact your portfolio, impact your trading? Obviously, this will negatively impact the Chinese economy, probably anything manufactured in China, exports, etc. As you should be aware of if you've been around with our BeachBum trading community for any length of time, we have not invested in any individual Chinese or Hong Kong stock for about a year, and will not do so. We could talk about the risks and why that's been the case, but again, we've been talking about that for the past year. So the only way we trade Chinese stocks at all is with these ETFs. Yang is the ETF to play to short Chinese tech stocks. So obviously these lockdowns cause Yang to go up because the Chinese tech stocks go down because their cities are being locked down. If one were to want to long Chinese tech stocks, the inverse of Yang is Yin, which is long, betting Chinese tech stocks up. Yang is Chinese tech stocks down, and many of our fellow BeachBum traders have made some good money trading Chinese tech stocks relatively safely using yang and yen. So again, just something to be aware of. Probably be increased volatility in these areas, but again, make sure that your portfolio and anything you buy is not going to be at risk due to these ongoing lockdowns in China. Some additional trading strategies, techniques that I wanted to start discussion with our BeachBum trading community about, and I'd love to hear your thoughts on it in the comments below, in our Discord, our Facebook group, etc. Again, just starting to think about potential additional opportunities, ways to make money trading now and or in the future. And I'll throw these ideas out. And again, I'd love to hear your feedback. And let's talk about if you have experience with any of these trading strategies. Let us know pros, cons. Do they work? Not work? Why? Etc. What's your experience in these regards? And again, in choppy markets, etc. Where potential swings aren't very attractive necessarily. I'm thinking about looking for some short-term strategies to potentially make additional money trading. So like day trading, scalping, etc. So some potential opportunities that may be there that I perceive may be opportunities to make money trading, and again, love to hear your feedback, is changes in futures prior to versus the 4 a.m. pre-market open. A lot of these leveraged ETFs rebalance, recalculate often at 4 a.m. or at like 8 p.m. at the close of after hours. They do the recalculation, then you'll see a gap up, gap down at 4 a.m. Often, or whenever the ETF opens, so 7 a.m., 8 a.m., 9:30, etc. And in the meantime, the futures are moving. So if the futures are going up prior to this recalculation, is there an opportunity to get in cheap at the bid of one of these ETFs, which then when it opens at 4 a.m., one would expect it to go up, and vice versa. If the futures are down prior to this open, would you want to sell or take a position in an inverse ETF? So again, is there an opportunity watching the futures prior to the market open and then placing a buy or sell accordingly, so that right at that open you can benefit from that move in the future? So again, anyone have any experience? Anybody try this? Let's talk about it, think about it, share our experience, and see if there's an opportunity to make further money trading in that regard. Another one that's there's actually come out a recent ETF that uses this strategy. The ETF is called NSPY. It's like nighttime spy, and their strategy is to buy at the close and sell at the open. So the strategy of this ETF is to, I believe it, I'd have to look in more detail. It's not in FinViz, but I have a direct link here in the notes, and you can get more detail on this night shares ETF. But again, it's to buy at the close and sell at the open. So again, are there opportunities to trade things, be it the SPY, the other indices, various commodities, etc., buying at the close and selling at the open? So put a buy in right at market on close, and then sell it right at the open. This ETF is based on the fact that has greater returns than buying during the day. So again, anyone try this, have experience, make some money doing this? What do you think of that strategy? Right now, that ETF is not in FinViz, so we haven't really been able to get much data on it other than the direct links to their sites. So a third similar type of strategy would be just playing the pre-market spread. And the thought is, or the hypothesis would be, to buy at the top bid plus a cent and sell at the bottom ask minus a cent. So when there's a pre-market spread, which often there's, sometimes a very wide pre-market spread, is that an opportunity to make some very short-term short-term gains just based on trading that pre-market spread. And again, since we're trading at Webull, we can trade at 4 a.m. We can take advantage of that spread immediately. Now, some things are not liquid. They don't actually even trade at this time, and you can see that both in the charts and the extended hours charts, and also like in Thinkorswim, if it shows up as NA, it means essentially it's not generally trading during that time. So some of these strategies may not work with all stocks, ETFs, etc., if they don't actually ever get any volume during that time. So again, love to hear your thoughts on these strategies or any other strategies, trading strategies you might have, be they short-term, long-term, etc. Let us know what strategies, what hypotheses do you think are additional ways to make money trading, and share them with your fellow BeachBum traders in our community, in our Discord, our Facebook group, etc. Let's talk about it, and let's help each other succeed in trading. That is the goal of our BeachBum trading community. Let's work together. Let's help each other succeed in our trading careers. So I hope that helps. Thank you again for watching part 1 of our weekly trading game plan for the week of September 5th through September 9th. Please let us know what you think of all this information, all these strategies, the market analysis, etc. in the comments below, in our Discord, our Facebook group, via social media, etc. Please let us know what you think. If you have any questions, again, please ask those questions in the comments below, in our Discord, etc. We'll try to answer your questions as much as we are able. We welcome any questions you may have, and let us know how we can help you succeed in your trading. So we hope you'll come back tomorrow for part 2 of our weekly trading game plan for the week of September 5th through September 9th. And we'll apply all these strategies, all this market analysis to select particular stocks, particular symbols, ticker symbols, to put on our various watch lists to watch for trading next week. So again, please come back and join us for part 2 of our weekly trading game plan. And we look forward to seeing you then. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction. but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.